In this lesson, we're going to walk through an example of how to fix a journal entry that someone has made incorrectly. So let's start out with that Tom pays, Tom the tenant, paid $12,000 for rent, and this was for 1 year. So the math is easy on this. Tom's basically paying $1,000 a month for rent. Now, if we were going to look at this the correct way, what would be Tom's journal entry if we were doing this correctly? And let's assume this is on August 1st or 8/1. So Tom's journal entry on August 1st would be prepaid rent for $12,000 and cash. So he would debit prepaid rent for $12,000 and credit cash for $12,000. And let's do some T accounts over here. Prepaid rent, 12,000, and cash, 12,000. Okay, and then at December 31st, how many months have passed? Well, if this was August 1st, we would say August, September, October, November, December. 5 months have passed, and he's paying $1,000 a month. So we would record rent expense of $5,000, and that's a debit, and we would credit prepaid rent for $5,000. And so let me put my rent expense T account over here. So I would have a debit balance in rent expense of $5,000. I would credit prepaid rent for $5,000. And my balance at the end of the year would be $7,000 in prepaid rent. Okay, and this is what would happen if everything was done correctly. All right, but let's assume it wasn't done correctly. Let's assume that instead on August 1st, what actually happened then was that the cash was the cash was paid. He's paying cash. He paid cash of $12,000, but instead of debiting prepaid rent, he debited rent expense. So Tom debited rent expense. And so let's put my T accounts in then here. We have rent expense, my T account here for $12,000. We have that cash T account of $12,000, and that's this transaction. Now we get to the end of the year, December 31st, and we're looking at our transactions, and we realize that we should actually have some prepaid rent on our balance sheet. And this is kind of what I've talked about. The focus is on the balance sheet and not the income statement. So we look at how much rent that we're still owed, and this was on August 1st. So we are still owed 7 months worth of rent, all the way from January. Let's count these up so we get them right. January, February, March, April, May, June, and July. So we're owed 7 months of rent at $1,000 a month. So we should actually have in our prepaid rent account $7,000. We should have an end of the year balance of $7,000 in that account. So how are we going to get this account so it has an end of year balance of $7,000? We're going to debit prepaid rent for $7,000. And we're going to credit rent expense for $7,000. So the net balance in the rent expense account then is $5,000 at the end of the year. And so you can see now that this answer here with the rent expense of $5,000 and the prepaid rent of $7,000 at the end of the year is exactly the same answer we had here. We have prepaid rent of $7,000 and rent expense at the end of the year of $5,000. Okay, so that's how you then. So this is both an adjusting journal entry. It is an adjusting journal entry, but it's also a correcting journal entry. And it's very rare that companies don't have some type of correcting journal entry. Okay, so that's how you fix a incorrect journal entry.